welcome back. You're watching Stockwatch with me, Julieta Televi, and joining me to take your stock-related questions this evening are Alex Duys from Umthombo Wealth and Zwelakhe Mnguni from Benguela Global Fund Managers. If you'd like to send questions, please email stockwatch@bdtv.co.za or on SMS via 41392. Zwelakhe, Alex, good evening to you both. Alex, if I may start with you tonight, it's been a pretty ferocious 2 days of selling on the markets globally. And yet we recovered far, far better than we started today. So maybe just talk us through the ferocity of the market. Why did everything fall in a heap? Was it the US employment numbers that came out on Friday? Was it Japan raising interest rates to all of 0.25% last week? Why has the market got so spooked?
Yeah, good evening, Julieta. Certainly those factors are the main reasons for that. But also to be fair, I think we've had quite a good run this year, and the market was due some form of correction. So I think the weak economic data we saw in the US certainly spooked investors a little bit. And then, of course, interest rate hikes in Japan has been that the yen carry trade is now being reversed. And that trade has been enormous amount of capital put into that trade over the last 17 or so years because of the low interest rate environment in Japan. So pretty much what the carry trade means is that you can lend money in Japanese yen at cheap currencies and low interest rates, and then buy other assets at different currencies. Now it reverses, which means you have to go sell your assets, for example, US shares, whatever, and buy back. So we've seen a big appreciation in the yen relative to the dollar, over 10%, and also the VIX has hit levels we haven't seen since COVID. So certainly the market has been shocked to its core. And that's usually what happens. Emotions does go in a pendulum, from being optimistic to negative. We're seeing that at the moment. Now, that doesn't mean we are going to enter guaranteed into recession, or that we can have a recovery. We simply do not know. And I think that is why there's some uncertainty, and that is why you're going to see volatility not only today but probably going forward as well.
Yeah. I was reading some very interesting FT articles, and one of the comments were, it's easier to sell Japan into a rout than any other Asian market, especially seeing as a lot of investors have transferred money from, I suppose, the Chinese stock market to the Japanese stock markets, and you talk about the unwind of the carry trade. But Zwelakhe, one of the other headlines on the FT in its sort of Lex column was, everyone calm down. So would you agree with that this is maybe a bit of an overreaction? I mean, we have been wanting interest rate cuts from the Federal Reserve. So now that we have a prospect of maybe what people are calling panic interest rate cuts, everyone is commensurately panicking. But is there an element of overreaction to what is going on here?
Yeah, I do believe that, Julieta. I think, as Alex says, there is an element of technicality where guys are closing their shots. And I think if you look at where we are, there is nothing that suggests that the US economy is falling apart. And yes, the unemployment numbers came through and wasn't as expected, but they still have a low unemployment level, 4.3. And I think the overreaction is probably a lot more to do with the market expectations and having to recalibrate those expectations rather than that there is a crisis out there.
Yeah. And as Alex talks about the pendulum, so, maybe we settle somewhere in the middle, but the pendulum swings from, well, what happens to a pendulum. So it's maybe somewhat reactive. Also, one of the other factors to consider, and I don't know how much this plays into everything, is that it's summer holidays, and you can get exaggerated moves in August. Do you think that is a factor here, or do you think maybe that it would be a little bit naive to attribute some of the moves that we've seen to a sort of a thin market having exaggerated moves either side? Alex?
I'd probably say there is still quite a lot of activity in the market at the moment. I don't think we've thinned out as much as we could. Probably later in the month we could see that thinning out of volumes, but certainly I don't think we are at that stage at the moment. I think it's just a panic from market participants.
Yeah. Alex, would you expect the VIX to continue being as high as it is? I mean, it's a very interesting chart if you look at a kind of over 5-year period, and as you say, it's at the highest point it has been since 2020. Or do you think it'll settle down a bit?
It's very difficult to say, Juliet. I think one thing we can agree on, the VIX were too low for what period of time. So almost like we knew something was brewing is going to happen at some stage. That's what we're seeing now. And that's always usually the case when volatility is too low, you have to be cautious. I don't know if it's going to remain elevated or not, but I would imagine from a common sense perspective, where are we entering the cycle where we are seeing some slowdown? I'd expect the VIX to be, call it, slightly higher than average, at least. So, but yeah, I would be very surprised if it does revert back to where it was, recently.
Yeah. Okay. There's a question on Npass, and the viewer says, any reason why Npass could stay afloat in a sea of red, even with Tencent down this morning? Alex, sticking with you as well, like before I go to you, it was quite interesting to see a few shares hold up.
Yeah, I must admit, I don't know what Tencent closed this morning. I can't recall. I think it was slightly down, but it was certainly better than some of the other Asian markets. But yeah, I remember there was also share buybacks that's happening, or it could be with an African investor context, I guess some flight to safety, where they perhaps sell some other shares and then go buying Naspers. But I think you shouldn't read too much into day-to-day movements. I think we are still very bullish on the Naspers process stables, so I think valuations are relatively attractive. So I'm not surprised that it's doing relatively better than some other sectors.
Zwelakhe, your thoughts? I mean, also, the share buyback program, is there like is there a fundamental underpin? Not fundamental, but is there an underpin to Naspers' share price?
Yeah, I'd probably say not attributing it only to today, but I think what we've seen is that Tencent did pull back long before what we are seeing now in the US. And that was largely because the regulatory pressures that we saw in December on their gaming platforms. And the games have been brought back, and they are allowed to load new games again. So they are performing. So fundamentally, Tencent is on a strong footing, and Naspers is actually underpinned by that. I think there was a bit of a rand weakness that supported that or offset some of the weakness that we saw in Tencent. But broadly speaking, fundamentally, Tencent took the pain in December. It's recovered, but hasn't fully recovered compared to what we are seeing in the US market in the TMT sector.
Okay. And talking about rate cuts, a viewer says, which REITs listed on the New York Stock Exchange are positively geared to benefits of imminent rate cuts in September? And he talks about two companies, Prologis or Simon's Properties. I don't know if either of you look at offshore REITs. Zwelakhe, I'll stay with you on this question, seeing as you're global. And would they tempt you at all at this point in the rates cycle?
Yeah, look, I think with rate cuts looming, I think it might be an area where there could be some opportunities, but I think you have to be conscious of what you are looking at when you look at the REITs. I mean, some of them, the vacancies have opened up, and they haven't been able to bring them down to pre-COVID levels. But I don't know these specific companies, but I certainly say where there are services companies that are servicing these REITs. I mean, we have taken positions in companies like CBRE. Certainly, the opportunities are there, but the sector has taken a lot of beating in the last, say, 2-3 years. And it may be a fertile ground for opportunities.
Alex, do you look at offshore REITs or local REITs for that matter?
Yeah, sorry, my apologies. I can't give you informed views on the offshore REITs that was requested by the viewer, but certainly, yes, locally, if interest rates do come down, it should be a benefit to the REITs. But yeah, I think stock selection is still very important, due to some of the quality, not as good as it used to be, or a lot of debt levels and so forth. So I'd imagine offshore would be the same. Some stock picking will probably be better than just buying a basket of shares.
Okay. All right. So that's probably some homework for us to look at the two companies mentioned, Prologis and Simon's Properties. Then the resources stocks. Can you please ask the panel's view on Npass and then also Woolies? Alex, it was some of the PGM companies and indeed, interestingly, the gold companies took it in the neck today. And it was interesting that the gold price itself hadn't really dropped precipitously at all today, and yet the gold companies got sold off. So I don't know what you made of that. Sibanye, for example, gold and platinum exposure was down 4.3%. Your thoughts there?
Yeah, look, I thought that's the problem with gold companies. They don't always necessarily track the gold price. You know, and we've seen that even though they've done still relatively well, they should have done better considering how strong their gold price and rands have done over the last couple of years. For example, you could see the discrepancy between a Harmony and a gold, for example, year to date. On the PGM side, you know, it's very difficult because we've seen rhodium that was in a bubble that has now pulled back. And usually when you have a bubble, it takes many, many years for it to rebase before it starts growing again. It's very unlikely that you're going to see a knee jerk or a J-curve type of recovery there. And then palladium was trading at a premium for about 7 years to platinum. And metallurgically, you know, platinum should be trading at a premium. It's got more uses and so forth. So that is now reversed. And now pretty much you need platinum to do very, very well in order to have a much higher PGM basket. So we're very cautious on the PGM side. You know, if you do want to play PGM, your preference would be more for quality. In that case, an Amplat. Yeah, something like a Sibanye, of course, is more geared. So it's got, call it, I refer to as higher beta, meaning it's got lower margins or it's more sensitive to changes in the commodity prices. So when you are seeing a downward cycle, Sibanye tends to fall more and vice versa. And I think the same can be said for Impala relative to an Amplat. It's more geared, up and down.
Perhaps we can bring up the chart of implants because that was the viewer-specific question. So Zwelakhe, if there were a severe recession in the US, would that be disastrous for PGM companies, given, for example, auto sales? The inference being that, you know, you'd sell fewer cars.
Yeah, Gillette, I don't even think that we need to have a disastrous scenario. I think the Chinese environment remains relatively weak, and what's exacerbating the pain for the PGMs is that the electric vehicles market keeps growing at a fast pace and offsetting some of the growth in the internal combustion engine. So there is pressure, and the commodity prices are not favorably positioned at where we are. They've pulled back significantly, and we do need to see a bit of a stabilization in China and a bit of stability in the outlook for growth in Europe and the US. But currently, as things stand, I think the market is reacting to the news of the global economy potentially being under pressure, and therefore consumption expenditure being under pressure, and vehicle sales being one of that big component of that.
Yeah. And the questions just come through asking, if the US goes into recession, would that favor Trump? What do you think?
Yeah, that's a tough question, but I think a recession probably. I don't think the US is going to go into a recession. I think if it does, it will probably be favorable for Trump because he's considered to be a business person who understands the value of bringing work back into the US and driving economic growth. So it might be favorable to him that people then assume he'd be able to restart the economy if we go into a recession. But at this stage, I don't think the US is close to being in a recession scenario.
Mm. And Alex, if it were to go into recession, so say the worst happens, what do the stats say for sitting presidents who preside over a recession and then subsequent elections?
Yeah, so Gillette, I mean, when you do have recessions in the US, the sitting president or sitting party usually then loses or historically has lost the upcoming election. So that will certainly, I think, increase the probability of a Republican win if we do enter recession before that. It's just because people are voting with their wallets, right? So the media and so forth tends to focus on people who's got certain aspects they vote on, for example, what's happening in geopolitical and so forth. But most of the average American tends to vote with what's happening in their pocket. And if they're unhappy, inflation is too high, economy is not doing well, they tend to vote the other party.
The interesting thing is that Donald Trump has been pushing back on, has sort of been attacking the Fed ahead of the election. So if the Fed were to cut rates sooner than November, I mean, and maybe even, maybe more aggressively than we had been pricing in, do you think that would have an impact at all, Zwelakhe?
Yeah, I think it would. I think if the Fed cuts aggressively, it would be an indicator to the market that the Fed has seen some numbers that suggest that things are getting horrible very quickly. I think that would trigger like a big sell-off in the market. So I would hope that they continue on the path and they remain guarded. But a aggressive cut would be an indicator that something has gone wrong in the system.
Alex, have you revised what you might expect from the Federal Reserve in the next couple of months?
It's difficult, Judith. I mean, if you look at the last 2 years, people have been calling for cuts in rates in the US. And every time new information comes to the fore and we have to change. So I think it is likely that the likelihood is higher, that there will be a cut, but I don't think it's necessarily a foregone conclusion. Because, I mean, you still need to worry about inflation. If you cut too quickly now and inflation gets out of control again, it's like a genie out of a bottle. It will be very, very difficult then to get it down again going forward. So you have to find that balance. Sometimes you have to go into recession to some extent in order to normalize the economy again. So I think they need to be very careful. I've seen people calling for cuts of 75 pips now and 75 pips later. Yes, that might help the equity markets, but at what cost going forward? So I think those type of questions and discussions need to be held.
Yeah. So we're lucky you're laughing. I suppose laughing in horror, maybe. Right. There's a question on, before I get to maybe the local market again, and this is essentially not a local share anymore, but the panel's view on British American tobacco, it still looks cheap with high yield and compared to the likes of Philip Morris, or is it fairly priced after the recent rally? Zwelakhe, it has had a good run, certainly until the last couple of days.
Yeah, look, I'd probably say at best it's fairly valued. I think, it's a defensive business that you buy maybe to get a dividend yield, but also to maybe get some downside protection in markets like this. It is not a business that's going to shoot the lights out from a growth point of view. They offsetting their combustion product with a non-ban, and I think that they've got a long way to go in terms of sorting out their debt in a way. But other than that, I don't think it's a stock that would shoot the lights out. I mean, it's probably fairly valued.
Alex, would you agree?
Yeah, we probably find it reasonably attractive. I mean, it's forward dividend yields regional about 8% or so, which in pound sterling, which is attractive. We probably would think the stock, does have, call it 15-20% or so upside in the business. But, even if they do produce good results, the market doesn't really track it. So it's really a stock that people love to hate. But I do think if there is a recession, that will probably offer more defense than some of the other stocks in the market. So I think it's a relatively good option for South African investors that don't have perhaps other offshore opportunities. And to get 8% yield and dividend in pounds is quite good. Not really going to grow much from here, from earnings base and so forth, but we think it's a reasonable investment without getting too excited.
Okay, just a question of mine before we get to a couple of the other questions. It was interesting to see how some of the shares that got really smacked this morning, like the banks, didn't end up nearly as badly as they started the day. And I wonder if that is an indication that actually we're still far too cheap and that South Africa may be somewhat insulated from the sell-off that you're seeing in emerging markets by the fact that we've had such aggressive sell-offs until as recently as May. Zwelakhe, do you think there's an element there that's playing in our favor?
I think there is, Giletta, but I also think that when the US market opened, it opened deep into the red and then started improving. And I think by the time our market closed, it was clear that the worst fear had not materialized, and people were starting to bid a bit more of the local stock. So the recovery was also driven by the fact that the US market didn't go as bad as, for example, Japan.
Alex, okay, so aside from the day's events, on a longer-term thematic view, would you say that the JSE is still cheap, or SA Inc. stocks are still cheap, and therefore will have pulling power where maybe some other markets won't?
Look, I mean, I think it's first important to note, if the US goes into a recession and there's a market correction, or saying is if they get a cold, we get a pneumonia. So our market will be sold off in such a scenario. But I think then eventually people will start looking at what are we doing internally. So if the junior is still executing relatively well and is holding up and so forth, then perhaps we'll start seeing a re-rating in our market, perhaps first relative to some other markets. So yes, there is a component of it where your own internal actions can deliver returns, but I think the initial sell-off is contagion. We will sell off in line with the rest of the world.
Okay. Then there's a question on Nampak. And the viewer says, what's the panel's view? I've made a return of 60% to date from the investment. Is it time to exit, or is there more growth possibility? Zwelakhe, I think a viewer sent a question maybe last week or the week before. They were up 100% in Nampak. I mean, it has really had a phenomenal run. But do you think maybe it's done its gains?
Look, it's a stock that I don't like. I mean, it's a cyclical packaging business that has not done well for shareholders in a very long time. And if I was the investor, having done so well in such a short space of time, I would certainly take my money and run. I mean, it's not a stock that I like a lot. It's a difficult business to run. Yeah.
Okay. Alex?
I think the turnaround we saw in Nampak thus far has been remarkable. And what his team has done there, hats off to them. And I think also, if you look at the set of results, they mentioned there's still many, many levers to pull when it comes to value unlock opportunities that they are seeing. So, I think I would be reluctant to want to bet against them from the space going forward. Obviously, economic conditions will dictate what they can achieve to some extent, but I think the business is now very lean and is much better position. The best position has probably been in decades. So yes, I'm actually quite eager to see what they can achieve going forward.
See, this is what makes a market. Thank goodness we have two differing views. I shall get your stock picks now. Zwelakhe, what's yours this evening?
I'll go with Microsoft. I think it gives us a bit of participation in the artificial intelligence. That is some way to go before we can see real value out of it. But it also gives us the stability and defensiveness that we need in the current environment. I mean, it's trading at 34 times, which is not necessarily a dip in roast, but I do think that it is a defensive stock that can weather the storm very well throughout the current volatility.
Yeah, I mean, to have a cash pile like Microsoft would be the envy of the world, or unless you were Apple, of course. Alex, how about you?
Yes, I'm going for Renet. So, this is a medium to long-term hold type of business for me. But at the moment, you can enter at roughly about 35% discount to NAV. We spoke about BATS, but British Mac is at about 21% of the NAV now, low 20s. Most of the value lies in a business called the PIC Pension Corp, which is a unique asset that South African businesses can't get into. So a pension corp has got about 20% of the UK bulk annuity transactions, or pretty much meaning your defined benefit plans that companies are trying to get rid of and selling into businesses like pension corp. We think there's an enormous pipeline going forward, and they've got big market share there. And some stage in the future, there's going to be corporate action regarding the pension corp. Either it's other shareholders buying it out, or perhaps a listing, or whatever the case might be. So we think it's a very, very exciting asset, and it's probably misunderstood by a lot of market participants.
Yeah, I mean, I think, having a look at the results that came out recently, it's very clear that it's no longer a proxy for British American Tobacco. It's Pension Corp that's doing the heavy lifting for the company, and maybe that fact has been overlooked by a few people. Well, we shall leave it there. Zwelakhe, Alex, thanks very much for your insight this evening on this rather trying of days. Zwelakhe Mnguni is from Benguela Global Fund Managers, Alex Duys is from Umthombo Wealth, and up next we have The Close. Stay with us.